Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, Professor of Economics at the Catholic University of Korea. Professor Yang, thank you for making time on this Monday.
Happy to be here.
Well, stocks on Wall Street closed strongly higher last Friday, led once again by tech shares. The Nasdaq notching another all-time high. Korean shares up today too. What's the story in the global markets and here in Korea?
Okay, well, as you just mentioned, on Friday, Dow rose by 190 points, S&P hit another peak high, and Nasdaq rose quite a bit as well. What are the reasons? Well, the Guardian newspaper from the United Kingdom had a very nice summary. We've talked about some of these factors before, but the first factor is that Federal Reserve and the U.S. government is taking a very active policy view to try to keep the economy going. So it's maintaining low interest, and it's continuing to buy public and private bonds, and it has strong commitment to support the market. And there's rumors that Fed may even buy stocks. Then the second factor is that tech giants are doing genuinely very well. They've actually gained from the lockdown and shutdown that we had in the United States. So companies like Apple, Microsoft, Facebook, and Google and Netflix are really leading, especially the S&P stock increase. And then because of the various policies, the normal life seems to be returning in the United States, so there's perhaps irrational bit of optimism there. And then fourth factor is hopes for a vaccine is increasing. And then the last factor, which is also, I think, very interesting, is that because of the corona-induced recession and because of the low interest rate, there really isn't a lot of places that money can go to earn high interest. So that is the reason that why the U.S. stock market keeps increasing. And paradoxically, because the Fed is committed to maintaining low interest rate, buying all these bonds and perhaps even stocks, when there's bad news in the economy, as long as the news is not too bad, it actually makes the stock investors more optimistic, because that means that the Fed will continue these unusually active policies even longer. So in some sense, for the stock market currently, bad news is actually good news, as long as it's not too bad. And that seems to be applicable not only to the United States, but most of the major global stock markets as well. The EU stocks, FTSE and the EU 50 were mostly down last week. That's probably because of the coronavirus rising, as well as the post-Brexit trade deal negotiation between UK and EU, which is not going well. They only have up to December 31st to come up with a deal, but they seem to be missing. Then the Shanghai and Hong Kong, it was bad last week, but there was a big recovery in Hong Kong today. Shanghai is only slightly up. Nikkei, again, bad last week. It's only slightly up today, but all the markets seem to be doing well following the United States, because they just had a very good Friday at the end of last week. And now for Korea, Kospi, after a bad week last week, it's up 1.1% today. Kosdaq, again, bad last week, but it was up 2.48% today. The reason that it was so bad last week was because the coronavirus in Korea seems to be rising. But it seems to be recovering today, partially because, well, perhaps we can get beyond this. There's, I think, some more hope for the domestic economy. And also the individual investors, even though they sold today, they seem to be keeping the face of the market. Various reports says that they have a lot of ready cash that they are willing to put into the Korean stock market. So the fall last week just may have been individual stock investors taking their profit.
Right. Well, looking at the economy, the Korean economy more broadly, we heard today the Bank of Korea is probably going to lower its growth forecast, but the Hyundai Research Institute has already lowered its forecast for GDP growth this year from 0.3% to minus 0.5%. The previous forecast was 4 months ago. What do you make of this new estimate?
Okay, well, because we're nearing the end of the year, we see the growth forecasts sort of converging. In the OECD, they said that Korean economy may fall by minus 1.8%, but they have revised it to minus 0.8%. Korean estimates, which centered around 0% range, is now heading toward perhaps around the level of minus 1%. So all these international and domestic forecasters seem to be converging here. The Hyundai estimate is getting a lot of attention because it's the first report since the coronavirus has started getting worse again in the Seoul area, and it does acknowledge that there will be a double hit on the Korean economy, domestic consumption and exports. Consumption will not fully recover. It'll be minus 3.0% for the year. Exports will also take a hit this year. Seems about minus 9.2% overall, but that 9.2% negative growth sort of underestimates the impact of exports on Korean economy because we also had a very bad year in terms of exports last year. Last year, the exports fell by minus 10.4%, so we're starting from a lower base and it's getting lower. But that cannot be avoided because of the coronavirus. But if we end up with only about a negative 1% growth rate this year, I would say we are getting off very lucky.
All right, Professor, we're out of time now. We're going to have to leave it there for today. Thanks so much for making time today. We appreciate it.
Thank you.